It looks like sort of as predicted for the PCE inflation numbers. Both come in at 0.3%, the headline and the core on a month-over-month basis. We got to check that three-digit number in just a second. On a year-over-year basis, the headline number is at 2.7. That's up from 2.5. The forecast was for 2.6, so a little bit more than expected. Same story for the deflator, the core deflator, 2.8%, unchanged from the prior month. That is a little bit higher than anticipated, but not a huge move. It does show basically inflation is sticky and sticking around. Personal incomes up 0.5% as forecast. Personal spending, Lisa, you called this, 0.8%. The forecast was for 0.6. It was 0.8 the prior month. So Americans are still spending, gives more credence to the idea that the economy is strong. And with inflation where it is, this is certainly, I'm going to wager, this is certainly not going to change a lot of bond market thinking about when the Fed might cut rates. Well, I did look at the three-digit moves, and it looks like at this point that January and February were revised higher. So you've got 3.8 for January and 3.4, 3.3, 3.4 for February. So that's where most of the change comes in. The March numbers come in at 3.00 or 0.300 exactly, so right on the number, and doesn't suggest that there was a big inflation build in March, which is good news. When we look at the personal income numbers, the important number is always wages. Compensation is up 0.6, wages up 0.7 for the second month in a row. So this tells you Americans still have money coming in and they can still spend. And we know from experience that basically people spend what they make. That's what drives them in this. So at this point, the numbers are pretty good. And as we said, spending was higher than anticipated.
Well,